Thank you everyone for joining us. Thank you, Ninad. Thank you, Prasad and Jaran, for joining us for the today's session, which is more on understanding the investment philosophy and toward helping the incubators and startups when it comes to support the startup community. Being funding is one of the major challenges for many of the startups. And at the early stage, it is really a big trouble for them, right? And incubators play a very important role over there, be it in terms of mentoring, be it in terms of providing them complete support from resources to everyone. And Government of India have done a lot of works, like we have got many AICs coming. And in the last 5 years, we have moved a lot in terms of ease of doing business, as well as in terms of global innovation index and all. But now it's time for them to provide support with the finance and with the investment part. So today we have one of the very good panel when it comes to the investment fraternity from the all side. We have Mr. Nanad, Mr. Prasad, and Mr. Jaran with us. So I'll not take much of your time, and I'll hand over session to Jaran and to introduce all the panelists. And then we'll take some very good informative information from both of you people. Thank you so much.
Amazing, amazing. Thank you, Mukesh, and thank you to Headstart for putting together this panel. I'm sure the different incubators that are part of this audience today have a lot to learn from the two eminent gentlemen that we have on our panel today. It's my absolute pleasure to announce them to you. Mr. Ninad is a partner at 100x VC. It's a VC firm that invests in early stage startups and aims to invest in over 100 startups each year. It's usually the first institutional investor in startups and invests through the iSafe note. I'm sure we'll hear more about that in a minute, which it pioneered here in India. As MD and CEO of Aptech Limited for more than 7 years, he expanded its footprint to about 42 emerging countries with its brands of Arena and Aptech. And by adding new product portfolios, Aptech is now a multi-product, multi-geo company, where Ninad currently still serves as a director on the board. He's also associated with the Western region of CII as deputy chairman at an honorary position, prior to which he was an MD in CA Technologies, the world's 4th largest software vendor, covering India and SAARC. He's also a regular blogger, an author, a lover of supporting regional theater, and fundraising, which is very exciting and interesting. We also have Prasad Vanga here today. Prasad's the founder and CEO at Antil Ventures. Antil is a speed scaling platform for early growth stage startups in media, health, and urban technology, with a global portfolio of about 45 companies across India, US, Europe, Israel, and Southeast Asia. In his current role, Prasad leads the strategy, fund management, and venture building at Antil, prior to which he relies on his 18 years of experience in helping senior executives from large organizations such as Nike, Nestle, Novartis, and Google to drive their business transformations. He's also an operator. He's been an entrepreneur. He started his own business, which he exited within 3 years. And as an angel investor, he's backed several companies, some of which have gone unicorns, such as MedPlus and Sanofi, and others that are on their way, such as Tinker. He brings his unique expertise of combining large corporate consulting, entrepreneurship, and startup investment experience to help these companies to scale with speed. He was a board advisor to the Indian School of Business Hyderabad and SRITNE, Center of Excellence, and is an active alumni of the Stanford Business School. Gentlemen, it's a real pleasure. I can also say that I count Prasad as my mentor, as I'm also a member of the Antil Ventures family. Let me begin by just getting our audience to know both firms a bit better. Perhaps, Ninad, you can go first, and then I'll go to Prasad. Could you tell us a little bit more about your VC firm's thesis and what sets your firm apart today?
Thanks, Jaran, for those kind words of introduction. And thanks, Mukesh, as well, for calling both of us eminent. I'm sure Prasad is. I'm not so sure about myself, but I'll try and live up to the reputation of Prasad in this panel discussion. Yes, what is different about 100x VC? Are we the same? And if you're not, what is so different? Couple of things. We fund only Indian startups. We fund early stage startups. It could be a concept stage. It could be early revenues, pre-revenues. We only invest as the first institutional investor. So we do not invest if there's someone else there. So we, truly speaking, if we encapsulate all these three ideas, we are really the discovery platform. In 2 years, we have received, our firm has got around 10,000 pitch decks have flown through our firm, and we have invested in 60 so far startups. The biggest differentiation, and that's not a differentiation, as in we have open sourced the idea, is we invest through iSafe note, simple agreement for future equity. It's truly a founder-friendly instrument. We have, obviously, it is used, a lot in US and Europe. We have localized it. We have used it across all our investments, and we have open sourced it. So the iSafe document is on our website. So you may not come to us for investment, but use iSafe because it cuts down 6 months of negotiations, discussions, detailed shareholders agreement, valuation discussions. You won't believe it, out of 50 funded so far, plus 10, a couple of them, we have heard the pitch in the morning, liked it, signed off in the evening, and sent the money next morning. It's not possible unless you use iSafe. It's a standard document. So these are some of the things, and obviously we want to invest at scale. We have our ambition is from next year onwards to invest 100 startups every year. And it's possible because of the model we have built. So if you have early stage startup, if you have not already, you're in discovery phase, you want mentorship. So we invest, we mentor the founders, and then we take them to the next round of fund. In simple words, sounds easy. It's 24 hours work, weekends included.
Absolutely. And Prasad, what sets Antil apart? What's the philosophy around Antil Ventures?
Sure. Firstly, thank you, Zaran. Thanks, Mukesh and Ninad. I'm not eminent because I have a white beard, but I just enjoy these conversations because it just gives me a lot of pleasure to share some of our experiences of building companies and also listen to all the passion and zeal that the young, energetic entrepreneurs have today. Right. So I think one of the first and most important thing is our focus around courageous entrepreneurs. And I use the word courageous is because I feel it takes a lot to start a company. You take a lot of risk. You take a lot of, I'm just sorry, 1 second. Just going to put this on silent mode. Yeah. You take a lot of challenge, you take a lot of belief, faith, and that all of these qualities just don't come like that. It comes to some unique personalities who we feel will set apart and chalk the way for the new world, right? And for us to identify these courageous entrepreneurs is so important. That's, I think, one of the things that really sets us apart is basically, to focus on 2 words that we always believed in, which is scale and speed. With the experience that I've had in the past, I've had experience with both the large organizations like GE Capital and then which became Genpact, going to the stock exchange, the scale and the quantum of people that we managed and centers. Also with a startup where I started a company, sold it. And as an investor looking at, all these young entrepreneurs, we always feel that this, what happens in the larger organizations, which is the scale that they operate on, and what operates in the smaller organizations or the younger organizations, which is the speed. I think if you can bring both of these together, then there is a model that can actually work very well. And that's how Antil started. Antil started just 6 years ago. We started off with a thesis of scaling up with speed. And we said, let's build an ecosystem around this thesis, right? And we felt, okay, now will product development or support, will it add any scale? And we were not experts at that. And we said, we were not going to touch product, right? That's not our expertise. But marketing and sales definitely added that velocity for entrepreneurs. And that's what we built. So in Antil, what we built is a marketing and sales distribution team that helps the entrepreneur get to market and scale rapidly. Okay, that's, I feel, is our unique proposition. Today, we work with more than 150 corporates through which we actually use their distribution channels to help the company scale up. We focus on 3 verticals largely. One is media and urban lifestyle, urban tech, and healthcare. And in all these three verticals, we have a huge mentor ecosystem that actually helps these startups scale up with speed. It also has sales distribution from the corporate network. It also has a marketing agency level support from within. So these are the three things that we do. Capital is obviously an offshoot. It's a commodity. Everybody puts capital, and we also put capital. Our model, is kind of, there's similarities between, Ninad's model and our model from the standpoint that we believe in fueling many young entrepreneurs. So within a span of 3 years of investment period, we did about 55 companies now. And our idea, Ninad, is just exactly like yours, is how many more entrepreneurs can we actually fuel every year, right? And, and that's why we work like an ecosystem. We work with other partners, investors, and corporates. Sorry, long answer.
Yeah, no, great name, Antil. Great name.
Thank you.
Maybe what I can do is pick up on a thread that Nina touched upon, which is working with these early stage and young companies. Nina, how do you go about grooming the early stage companies? You mentioned there's a lot of mentoring. You mentioned that it's almost like a full-time job itself. So what does that journey look like? What are some of the typical challenges? Could you just shed some light there? Because a lot of our incubator audience members would be interested to learn from your experience.
Sure. So I think there's a fundamental difference between a good business idea and an idea for a startup. You can have a good business, earn your living. That's being an entrepreneur. A subset of being an entrepreneur is becoming a startup founder. You have to have an idea which, Prasad alluded to, which is fundamentally scalable and fast, two things which you used. If these things are not applicable to your business, you can't be called a startup. It's a normal business, and there's nothing wrong in it. I tell people, yes, you have a great business idea, run it like a normal business. But if you want to come in the startup ecosystem, you want to get funded by VCs, you have to think of scale. So that big difference is what, one of the first differences I find. Number two, I find in a lot of young people, I love people who are passionate, but they fall in love with the product. I tell them, fall in love with the customer. Be passionate about the product. Be, really, really passionate, but don't fall in. Customer is the person who's going to pay. So fall in love with the customer or the customer. I've got a great product which is going to disrupt the world. Yes, but who's going to buy? Do you have anyone who's going to pay for it? So this is the second big thing. One is scalability. Second is falling in love with the product. And third is, learning how to pitch. It's so simple skill, and it's very difficult to acquire, but you can do it. There are ways of doing it. There's tons of material on it, but 90% of the people who pitch to us are unable to tell clearly. They're unable to tell the problem they're solving. They're unable to tell what solution they have, and they're unable to tell us within the time frame allotted. So if you have 5 minutes, 10 minutes. So these are the three fundamental issues I have seen across so many pitches which have come across. I can talk more, but I just thought I'll highlight the top three which I've noticed. And all three can be fixed. This is nothing which cannot be fixed. You have to just pay attention to it, and it can be fixed.
Absolutely. So, let's pick up from that thread. Prasad, you've spoken with a lot of the companies at Anthill that we've taken literally from idea stage and then brought them into market and sort of helped them scale up a little bit. What were some of the things that you learned during that grooming process or that mentorship process that the incubator partners today can take away from this?
Sure. I think definitely one of the most, for me, the topmost is the whole pitching aspect, which is what I would call as articulation. Because, everybody is pitching, but nobody's articulating it correctly, right? And, it's like that. I think for us, especially I think in India, it takes time for us to articulate our pitch. I mean, our confidence levels when we were at school and we were growing up is like, okay, you don't know, just sit down, right? Slowly that's getting more empowered as we see our children. and our children are being asked to speak in public forums and stuff like that, which will help. But I think articulating your pitch is, I feel, one of the top things that I would say. The second thing I would say is, sometimes you get so detailed in what you're trying to do that you forget the bigger picture. You forget how you're going to scale this, from a longer perspective. You just get worried about fixing these small, detailed operational problems, and then you lose time, right? And you lose time, you get involved with that and just start. So one of the things I think to always do is to actually take time off sometimes, right? And then go and look and think with a clean slate and say, what did I start building? What problem was I trying to solve? Is that opportunity changed, or have I changed, or has the organization changed, right? I mean, this is something that you need to keep asking yourself all the time, and to see how that scales up. Right? I feel the third one is, cap fundraising, which is very important. Not raising the right amount of money always, right? For example, I actually need $1 million to get to the 5 million, whatever run rate, but, I could only find 200K, so I just raised 200K. Right. So that again is a problem, I feel, because you're raising amounts of money to just be, afloat for a few more months. And then again, you're in the market. So it disrupts the way you're doing business. So I feel certain businesses need certain capital to reach certain milestones, and that needs to be taken care of.
Awesome. Prasad, let's stick with you for a second. Both of you alluded to scaling and growing the company as one of the grooming challenges, and one of the things that both firms look to do. Let's say the product is 0 to 1, the incubation partner has done his job, help the company get to product, and some advice is needed, right? How do we work, or what can we do to start scaling this company? What does Antil do specifically to help different, or if you can pick up some examples of how Antil helps scale companies that the other incubator partners can take an example from?
Sure. See, what we did is that, I think we started off by saying that, corporate channels have the scale, they have the resources. So one of the important things that we did was, we said, in the verticals that we are in, let's go and talk to these corporates. What are their bigger challenges in this whole innovation ecosystem, right? And then we onboarded corporates, and we asked them, we said, sorry guys, I'm at home taking the call, so you will hear a little bit of disturbance here and there. But anyways, yeah. So I was saying that, we talked to these corporates and asked them, okay, what are your big challenges, right? And these challenges are, can be mapped to solutions that the startups have. And that is the reason that in the span of just 3 years, we've had 150 odd corporates sign up with us. And some sign up for market access, and some signed up for co-investment. And some signed up for research, saying that, okay, I want to find something, I'm unable to find it in this ecosystem. Can you help us find, right? So I think that's something unique that we've done, which actually gives great velocity for our startups to choose, saying that, oh, I have to, talk to these corporates to actually scale, right? So I think that is one of the most important things. Yeah.
Over to you.
Yeah, I think I agree with Prasad. All of the above, I would say. Obviously, each firm has a different flavor. But I think it starts from the beginning, because we fund sometimes even, very early stage, concept stage. So the modeling itself sometimes requires thought process. What is the go-to-market? Is it DTC? Is it B2B? Is it how we're going to approach that? So the entire part. Sometimes there's people think growth hacks is everything in life. There has to be a strategy. I'm not saying growth hacks are bad, but what is the strategy behind it? So some of this kind of thought process first. Then second is, if you want to beta test the product, some soft markets through our contacts, and most importantly, our network. Obviously, we have now a network of startups itself, plus a network of corporates we have. So these are tangible things which we help them in scaling up.
I think that's actually quite fascinating, because very often we hear founders talking about my growth hack handbook and the 10 different things I'm doing to scale, but to what end, right? I think that's a very, very interesting.
You should ask you should ask your audience to respond. Is strategy days, are the days of business strategy over? Are you replacing it only with growth hacks? It would be interesting to see the comments.
Actually, yeah, that's a good one. So folks, please do type in the chat box with your comments, and we'll sort of take a quick tally towards the end of the session. But Nida, the other thing that's very interesting about both the firms, right, is it's neither of them operate as typical investment vehicles. Both firms have seen, especially 100x, has launched multiple initiatives over and above their investment practice. One such initiative that caught my eye was 100x Gurukul. I know that there are a few other. And I think what would be very exciting for the incubators and the startups in the audience today is to not just learn about them, but understand the reasoning behind why the firm put them through and why they had to figure this out. So this would be great to hear as well, Nina.
Sure. So I think at 100x, we are obviously interested in investing in great startups, and it's a VC firm. But other than that, we thought we should also help the ecosystem and open source as much knowledge as we have. So, the first thing we did open sourced was iSafe Note. So it's available. So there have been instances people write email to me, thanks, I used iSafe in my discussion with some other VC. Great, that's good for us. 100x Gurukul, the second cohort started yesterday. The first cohort, we had 200 and another 200 plus now. It's absolute not for profit. Any startup entrepreneur wants, we have master classes which are recorded live. Yesterday, I took a session live with the new cohort every week. At the end of 6 weeks, we hope that we cover everything from marketing, scaling up, how to pitch, all of it. But you have to apply for it. Our third cohort is not yet open. And there's a short screening process. We just don't want spectators in it. It's free, but at the same time, we keep adding resources. So there have been times when we get a startup founder, we tell them, do a Gurukul course, then come back to us. You are early, it might help you. We do have other stuff. We have an interesting program called Founders Dating Program. And it's not the dating you have in mind, Zaran. It's fundamentally, if you're a solo founder, if you want a co-founder, it's not very easy sometimes. You don't have access. So we get both of them together. The first one we did in the physical space. Now, of course, it's all virtual. So every couple of months, we have a founders dating program. So these are a couple of things which you do. These are absolute not-for-profit.
It's interesting because they kind of solve for two things at the same time. One is they go on to support the ecosystem. And then the other is this support to the ecosystem goes on to create a feeder for the 100x fund. I think that's brilliant. I think we have a similar thought process here at Anthill. I'm just going to check because Prasad, your videos are. Prasad, are you with us?
Right. Yeah.
So Prasad, similar, just like 100x has 100x Gurukul and different initiatives to support their investment practice. Anthill has, the India Immersion Program. There's IndusX. We're about to launch Athena. There are different initiatives that Anthill is doing, but at the end of the day, they feed into our investment practice. Yeah. So could you tell us a little bit more about why we do these kinds of things?
Say that again, the last bit. I'm sorry, I just got distracted a little bit.
No worries. So the question was, alongside the typical investment practice at Anthill, there are multiple initiatives, such as the India Immersion Program, the launch of Athena, IndusX. Why does Anthill do this, and how does it benefit the founders?
Okay. Yeah. So I think, and Ninad will accept this, there has to be some structure in providing, I feel, some mentorship, in providing even an ecosystem. Okay. When we picked Anthill Studio, we said we're only going to focus on media tech in 3 areas, right? Film and entertainment, television, and gaming. So what happened because of that? is everybody who's interested in these three verticals came to us, right? From a Netflix to a ZTV to a Sony to everyone, right? And we created that ecosystem. And that ecosystem then, in turn, helped the startups apply to these programs. Because then they know, okay, fine, I have this ecosystem that I can apply for. It's just not Prasad and Zaran with Antil that people will apply for. It's the ecosystem that they will apply for when you're running a program. And that's why it had to be a program which was verticalized, right? That's where you had Antil Studio, we had Lumos, which is healthcare. We had IndusX, which we just launched, which is Indus Valley Civilization Reimagined, which focuses on clean water, sustainability, and all of these areas. So we're getting more and more companies that are interested in those areas come on board. Mentors that are focused on those areas come on board, right? Then we now just started Antil Athena, which is a horizontal. I mean, you can also now think about this world as vertical and horizontal, right? I mean, you can think about an AI accelerator. Athena is more about enabling women founders scale with speed, right? Today, out of the 50 companies, 35% are women founders in Antil. And we want to see is there a possibility to bring it to 50-50. So I think the idea here again is to verticalize or horizontal build ecosystems that can actually support the startup to scale with speed. And that is the reason that we did this.
Right. I think what's emerging is both these funds that have set out to have differentiated strategies, 100x and Antil, are both adding initiatives on top of their investment layer to act not just as ecosystem support, but as a feeder into its investment practice, which again could be very, very interesting thought process for some of the incubators and early stage investors that form the bulk of our audience today. Maybe I can switch gears here a little bit. Now, from what I understand, both of us are working on a sort of cohort-based model. You can call it an accelerator, you can call it an early stage investment practice, but there's a lot of different sectors that we run these accelerators across. What do you foresee the impact of this acceleration across these different ecosystems, Ninath first, I guess? Given that now a lot of early stage VCs are a lot of these big VCs are coming earlier and earlier, Chiratil on Sonic, we have Search, we have Accel, Pulse. So we have a lot of these folks coming earlier. So how are accelerators to play in the market today?
Well, yes, welcome to the party to all these guys who are coming down the ladder. We've always said we're on the ground floor. You big guys are on 25th floor, but maybe, so welcome to the party. The party is really on the ground floor. That's where the fun and excitement is. Early stage investment is always tough. Returns are asymmetric, and it's a very different ball game. But it's good. It's, I think, good for the ecosystem, and it's not a short-term thing. I think it's a trend which will sustain. If they come in that early, the chance of them, funding a capital-hungry or any other startup and providing capital at regular intervals, and the chances of that becoming huge are far greater. Yes. Far, far greater. So if you have a capital-hungry startup or a startup which is on a momentum, and every time they have to look at early stage other people, then other people, then other people, it is not easy. It is not easy. I'm not saying it's difficult, but right from the first word go after our discovery, these guys are not going to go through 10,000 pitch decks like us. We do the heavy lifting, and if they come in at second, third stage, the chances of massive success for the startup are far greater. So it's a welcome situation, and that will balance out. Obviously, the big VC firms have a different mindset in terms of the way they look at ticket size, and they say that the efforts are the same for this and that. I think it eventually will balance out where they will say, okay, we will ensure that we do only at this stage these amounts, and some they might just track. So there are occasions when these big VC firms see our deals and they do not want to invest immediately, not because they don't like it, but they feel it's, from a ticket size perspective, it's too early. and they track it. So that also is a good sign. So they track it for 2 years, 1 year, and they may come later. So I think it's a good amalgamation. We had never anticipated this would happen so soon, but it's happening. It's an irreversible trend. It's great for early stage investors like us, and more importantly, great for accelerator incubators, and most importantly for the founders.
I think that's damn heartening to hear. I would say, Nina, but Prasad, what are your thoughts on this?
I think, I totally agree. Firstly, with Nina, I think this is a great way for the larger VCs to get deal flow, right? Also, and that's why today they're all thinking about early stage programs, so that they want to also, be in the space of building a brand of founder friendly early stage, so that they actually have a path towards, till late stage, because they have the capital for it. But that doesn't mean that they stop looking at accelerators like, 100x or Antil. And when we've had many exits in the past to larger VCs, right? I think it's a great way of thinking about the deal flow. Obviously, they don't have the time and energy to ensure that the hand-holding happens for the first 6 months to 1 year, right? You have only as much time. You're managing a large amount of capital, and the space that you're in, you can make a connection, but you don't actually follow on to even sit on meetings sometimes to negotiate contracts, right? So things like that. I think there is a clear differentiator. There is an opportunity for a market at this stage, and there's an opportunity of a market at a later stage, right? That's my view on this. Yeah.
So similar, and it's interesting. Maybe before we go a little deeper into the incubator side of things, two things. One is we got about 73 people here today, folks. I see a lot of questions coming in the chat box. Please do keep them coming. The team is screening them, and we'll ping them to the team towards the later half of the conversation. And Ninad, you'll be happy to know that everyone is saying that strategy is still very much there and very much important. So I think we're good. Now, again, if I put myself in the shoes of an incubator, an AIC CEO, and I look at these two firms, right, that have been there 6-7 years or are now making waves with their investment notes, growing their companies. Both of the firms are known for their distinct values. Antil has scale with speed. 100x has founder-friendly, iSafe, early checks. How can an incubator think about this? So what are some of the lessons you would tell a really early stage incubator to think about to start standing apart, to start learning from values or creating their own distinction? Nina, would you like to go? And then maybe I'll lobby it over to Prasad.
Sure. I think that, incubators are playing a fantastic role in the Indian ecosystem of going much before and, incubating the idea. I think what they will need to think is not just incubating an idea, but how many of those ideas are getting funded and how many of them are not getting funded. The reason none of the ideas will be bad, otherwise they will not come to an incubator. And if they're not getting funded, how is it that they can connect with folks like Prasad and me to help them, so we share knowledge openly and freely. And it's possible for us to share knowledge. So if they feel they need to connect with people like folks like us to share knowledge with their incubatees and figure out simple things, how to scale, how to pitch, all those things is possible. So that bridge has to become a little stronger. It is there, but it's not as strong. It is more driven by, once in a year, once, twice a year, whatever. But that, if it happens stronger, the bridge becomes much better. And sometimes maybe a good idea, which doesn't go to the end of incubation, doesn't get funded, may get funded.
I think that's a great nugget here for some of the folks to learn. Prasad, what would you like to add? What are your thoughts there?
Yeah, so incubators, I think the landscape is changing. Initially it was, they would basically say early stage incubator. Now it's becoming AI early stage incubator, right? And then maybe there'll be another buzzword, blockchain AI incubator, right? Like I feel they're getting more and more verticalized or more horizontal as incubators are getting. Again, I think they're realizing the need that, if you try and look at the whole universe, it's too big and you're lost in the crowd. But if you actually focus on an area, then you're able to be more successful. Okay, that's one part. The second part, definitely, Ninad, I agree. I think metrics for incubators, on a consistent basis should be, one of them should be definitely as to why these companies have not got funded. See, most incubators miss this point about hustling a deal, right?
Yeah.
Hustling a deal
Absolutely.
is so damn important. It's not just taking them through that program, because you take them to the program, the guys will learn well, and then finally, maybe they haven't got funded and they go back, and then what happens to the companies that have come out of the incubator? What happened to them, right? So hustling a deal along with that founder is so important. And, talking to investors, ensuring that they are getting funded, that's a large part of an incubator's role, right? Which I think we forget to do, and is important that the focus is there, right? And the third important thing I would say is that when you get mentors on board or people who are actually coaching these startups, please be very careful, because the reason I say this is it's not just a face on the website or a brochure that is going to make you successful. It's a mentor who has time and who is able to spend time with that startup. I think it's very, very important. I've realized in the past that I've had many friends who were large company CEOs or board members who have a job and who didn't have the time. They wanted to help, but they couldn't, right? But I had younger founders who have just done like startups and, who've just come out of a business, maybe a failed founder or whatever, who probably gave the best advice to a startup, who probably gave the best knowledge to a startup. So be careful about when you're getting in mentors, ensure that they have the time for it. And only then get them on board.
So I guess one good nugget for our AIC CEOs and our other incubator managers here is it's not just your founders that need to hustle. You guys need to embrace that hustle a little bit too. Coming down to how they can work with a fund such as 100x, or how they can work with a fund such as 100x and AntiLithium. How does an incubator formulate relationships with you? How do you view your relationships with incubators and partnerships with them? What advice would you give them to have these connections with funds such as yours? Prasad, since I think you were going last, maybe you can just continue, then I'll go to Meena. Prasad, you're on mute though. Yeah, no worries.
First step is to ask, what's the focus of the fund, right? Second is to ask how much money is left in the fund, because, without any money in the fund, I'm sure that, basically it's also sometimes what happens is that we've already, taken like 30-40% of the fund by early stage. And now we have the remaining 60-70% left for investing in the same deal flow. Then you don't have enough capital to invest in early stage incubated startups coming on board, right? So you got to be very clear and say, okay, fine, I don't have money now, but maybe I'm raising my new fund, whatever. So I think that conversation needs to happen. It doesn't happen most of the time. Or I just want an Antil as a partner. Okay, great, but I don't have money to give you now. You have to wait for another 3 years. It doesn't make sense. So, but I think you need to ask these questions, these tough questions at the start, as to what is the value that my incubator can provide a fund like yours, right? What kind of companies would you like to see? What kind of founders do you like? Ask these various questions, and then you get an understanding of the profile of the VC, right? And then you basically ensure then you show the right deals to the VC, because you show everything else, and again, the VC doesn't have the time to evaluate everything.
I think Prasad has covered a lot of ground. I would just like to add saying that, yes, the emphasis on researching on the VC is very critical. The thesis, he mentioned about the fund availability, what have they funded, these kind of deals, That kind of effort one has to put in for sure. Incubator has to, the job, they have to kind of take it, if I may put it philosophically, poetry and prose. Poetry is when you take in the companies to incubate, because it's a vague concept, you're helping them to solidify it. And prose is the output, because you have to ensure that they get funded. If you remain on the poetry level throughout, wanting to make a difference in the world, wanting to solve the problems of the world, which is good as a starting point, but that at the end, when incubation is done, you have to get funded. So that's where prose is required.
I think that's good, right? So I think what both Prasad and Nina are trying to tell everyone here is really do your deep research on the fund and understand what a partnership actually looks like. Because at Antil, we've signed multiple MOUs and not seen a single deal. So we must research and go with a clear ask to the incubators. I have one last question before I begin asking you some of the conversation questions that have been coming in from the chat. And I'll just leave this open if anyone wants to take it. Is there an example of this being successful with your fund? Has there been an incubating company that 100x has invested in or Antil has invested in? And how did that play out for you and the fund? Could anyone just unmute and talk about this?
So we have a couple. Let me name one. The renal project was incubated in Bombay at NM College. The founder came to us saying that, I want to build micro dialysis centers across India and build massive number of centers. Today, if you require dialysis, unfortunately, very tough disease. God forbid, none of us should have it. But it happens only at a large hospital. So a person has to travel 4 days a week or 3 days a week, 4 hours one way, do dialysis 4 hours and go back. And his task was to do small, instead of patient going all the way to a large hospital, set up small dialysis. We loved the idea. They're already doing exceedingly well. We have funded them for last more than 2 years. They now have close to 40-50 centers. Their aim is to have 1,000 centers across India. It came through an incubation center, an NM College in Bombay.
Always great to hear case studies. Prasad, is there one that you'd like to talk about?
Yeah, so, one of the first investment was in 91 Springboard, which was a co-working space and an incubator at that time, when it started off as an incubator, incubating startups, and then moved into a co-working space. So we did invest in a number of those companies that actually came out of 91, because one of the reasons also of our investment was that it becomes a great source for us to get deal flow. My experience and we've also invested in companies that came out of MIT labs and a Swedish university in Lund as well. I can see some clear differences in incubation here and in incubation in the West or in Europe or anywhere else. Incubation here doesn't, I feel, still get enough support for all the things that we said in the past, right? Are we ensuring that they're getting funded? Are we hustling the deal? We're not creating the right network for them to get there, right? Whereas in the West, that network already exists in the university. So what happens is that when you actually pitching, even before you're pitching, VCs are visiting these companies and talking to them, understanding what product that they're building, keeping them in check, having a drink with the founder once in a while, understanding where it is going. And finally, just before demo day or after demo day, they've already decided here are the 3 companies that I'm investing in, right? I think we need to come to that level. Why I'm saying is that just before a demo day, you get an invitation, you don't know those companies enough, right? To say yes or no. But when you actually build some level of interaction of the VCs with the incubating companies and the founders, it creates a very interesting, relationship that goes on, which finally becomes, more commercial later. Yeah.
Fascinating. I think what we can do now is quickly jump into some of the audience questions. Nina, I believe this one is directed to you. What are your 2 cents for founders? So many funds are starting to focus on earlier stage funding. What are some of the do's and don'ts while approaching the right fund for support at early stages?
Wow. I'll give a Twitter-like response because this is a deep question. You want to know my secrets? Here they are. No, firstly, I think we have said earlier, but please do a research before you go to, if you're going to Antil, do a research on Antil. If you're going to 100x, do a research on it. Just don't blindly go to any VC. I think you have to pay a lot of attention on your pitch deck and your pitch, which you're going to do. Do it before a soft audience. It could be your sibling, it could be your neighbor, it could be your neighbor's dog. But practice your pitch before all of them. Probably the dog is the best person to do a pitch deck, so you get confidence before you go. Don't take it lightly, even the video pitch, or if you're going to pitch, or even your pitch deck. So that is important. Third, understand the difference between a good business idea and a fundable VC idea. It's this fundamental difference you have to make out. You have to ensure that VCs feel that VCs ask a couple of basic questions in their minds, and I'm giving you all the secrets today. They are asking fundamental questions about, is this a large market size? Are these guys going to make me money? How much money they're going to make me? Are you able to address these questions? You might have the best 8-grain bread in the entire world and selling only to South Bombay population. Is that a VC? I'm not saying it's a bad business idea. It is a great business idea. Is it a VC fundable idea? My answer is no. So you have to make that distinction and go accordingly. So this is in brief. I mean, there are a lot of points, but I thought I'll be brief because a lot of tons of questions.
I think that's very pertinent advice, because it's not that you have a bad business, it's just not a VC model. And as you correctly pointed out right in the start, Ninath, it's a subset of the larger entrepreneurial landscape. Prasad, the next question comes in for you, and this is related to AntiLithium. The question here is, what is AntiLithium about? Could you talk a little bit about the support you provide to women entrepreneurs? And how can early stage founders from tier 2, 3 cities get this support where a lot of the need is mentoring?
Okay. All right, great. Very excited about AntiLithium. I think we've received, firstly, more than about 100 applications from women all over India and a few from other parts of the world. The program is focused around giving 180 days of support. It's a staggered program, which means that you don't have to be physically present in a location to get this support, right? So that there are, there are 2 types of mentors. Mentors who have domain knowledge, or somebody who is probably telling you how to build virality with your campaign digitally, right? And then there are mentors who are probably founders in businesses that are similar or, in that vertical. One good thing is that the AntiLithium program is only for urban lifestyle consumer brands, right? So it's basically, it cuts out a lot of the, tech stuff out of this, because it is only for, this particular cohort that we're doing is only for urban lifestyle consumer brands. So only they have applied, a number of them have applied, right? So it also tells us what's more important from a sessions for them in terms of product packaging, in terms of presentation, distribution channels, supply chain. These are things that we focus on in building that. Early stage, seed stage, maybe pre-series A, and, support is, you will get marketing, agency level support, and sales distribution support. You will get business mentorship support, and you will get anywhere between 50 lakh to a crore check to start with. And then if you keep hitting the metrics that you hit, then there is a larger 3.5 crore check towards the end of the program or later.
Thanks, Prasad. The next one is really interesting, and I'd love to hear either of your takes on this. and this is something we discuss very often actually. A question comes in saying we're in the health tech domain, they're at the development stage and are set to go live here in October. Is it the right time to raise? And I think more interesting for us to discuss would be, how do we protect our idea or our product while we are pitching to investors? So would either of you like to take a stab at it? Because this is an interesting conversation we usually have.
Sure, you want to go first, Prasad? Or
No, go ahead, Neil.
There's no concept of NDA when you come to VCs. We see tons of pitch deck. If you start pinching ideas, we'll not be in this business. So you don't have to worry on that front.
Yeah.
When do you raise capital? It's up to you. It's very general, but one will have to see every business. Do you raise at concept stage? Do you raise at prototype? Do you raise with some customers? I'll get valuations better. There's no hard and fast rule. My simple advice to founders is, are you in the momentum game? Do you need momentum capital? Do you need to scale rapidly? What is that moment think that you need to scale rapidly? Is it at the idea stage itself? Then raise money. Is it at first customers? Then raise money there. If you don't have a moat, if you don't have an IP, you may have a moat by a different business model, but if you don't have an IP, it can be replicable. Are you worried someone will replicate the idea? Then you have to go fast. So it all depends on a couple of factors. You have to raise your money when you want to go extremely fast. Again, raising money is not the only thing in life. You need not raise VC money. You can do business on your own, but then you'll go at a very different pace. That's the difference. Yeah, Prasad, over to you.
Yeah, no, 1 second. Okay, yeah. No, I agree with you. And I think there are two kinds of businesses. There are VC fundable businesses, as Nath said, and there are businesses that are profitable, great cash flow. You don't need VC money. I mean, you can actually, there's so many businesses in this world that, so many people come to us and say, look, I have a designer store. Now, can I raise VC money? No, you don't need to raise VC money unless you want to become a Sabyasachi, right? Which basically took design and went everywhere else, right? So scale is very important for a VC. And only if your model allows that, and only if you think that, yes, I want to scale with speed, I need capital to do that, right? And you need to also spend that capital in a different way. Which is sometimes we're not used to doing that. We try to hold ourselves back from spending marketing money or sales money because we always learned that cash flow and profitability is super important for us, right? But again, if you want to blitz scale a little bit, there is a burn that will happen over a period when you're actually scaling up. Amazon won't be Amazon if it hasn't, investor money has been, burnt in a different way, but it actually became Amazon. Investors believed in his vision, believed in the business that they were building, and they funded that business at multiple stages. So unless you think that you don't require this money for speed scaling, don't take it. Just to run a profitable business, take money home, right? So that's my 2 cents.
Right. I think what's interesting is to the gentleman that asked the question about being at pre-incubation and what time should I raise, I think, funny enough, both investors today have answered that question. So I'll quickly move on. Nina, this is a question for you from the founder of a business called Job School, which is an edtech startup that looks to solve upskilling for staff and staffing services. The question he's asking is, could you please throw some light on iSafe funding for working capital to help them scale? And what is the due diligence required and the duration for approval for 100x?
Well, iSafe is not specifically meant for working capital. It is a convertible note. It converts into equity with some, obviously terms attached to it. So it's a convertible note. So if you're looking for working capital, iSafe is not the place to look for. It's eventually quasi-equity and it converts to equity. That's my first simple answer. What is iSafe? I don't want to take too much time. It's on a website. You go to 100x, there are tutorials, there are videos. You can have a look at it. Due diligence, So iSafe cuts out the entire time of negotiation of shareholders agreement and valuation discussion. It does not cut out the first part, which is due diligence. No VC will invest in any firm without doing diligence. So that diligence is always there.
All right, I think we have time for one last question. I think Prasad, I'll lobby this to you, and then there's a small vote of thanks that I'll ask the gentleman to take care of. Prasad, when you're looking at a pitch deck, there's a question coming in from the audience. What are some of the things that you're looking out for that get you excited to make that second phone call or have a deeper conversation with the founder?
Yeah, I think usual suspects. Is there a large enough problem to be solved? Right? Is there enough opportunity for this business to scale? Right. Two is just the way the founders have thought about the problem in terms of solving it. Is that business model or the solution that they've thought about, is that scalable? And is the product interesting and has some unique advantages, right, for scale that would allow me to reach out? Have the founders in some way already started the journey? Have they taken the first few steps, right? So that's not a pitch deck, but it is actually they have gone ahead, researched, they've gone ahead, done a prototype with someone, they've gone ahead, understood the market a little better. Have they done that, right? Yeah, I think pretty much these are the areas.
Right, fantastic. I think important for everyone to have that in mind. We're down. I think we've managed our time beautifully. Thank you so much, Prasad and Ninad, for showing up, for answering some of the questions in a very candid and conversational manner. I'll just like to quickly invite Mr. Bhagavati Patnaik, who's the CEO, AIC of Sivaraman, to confer the vote of thanks. Prasad and Ninad has been brilliant. Cheers. Thank you very much.
Thank you.
Hi, good afternoon, everyone, and especially special thanks to Prasad and Ninad and the design that Headstart has made it to convey to the community that the investors and the incubators must know what are the common areas to work on, so the co-founders and founders get a benefit out of it. So that's very important, and we need to talk to each other multiple times. Even because the geography and the problems in the geography are having potential for both of us, and we are not trying exploring it. And also, as investor and incubator, if you work together on geographies and potential of the geographies and exploring new markets and innovations, that could have been very exciting for both and the community to come together and reach to new heights in different sectors and different problems, and then we can see how it can be replicated and all that. So it's very important, and thanks for all the points that you had mentioned in terms of 100x VC, which has made angel and VC easy for the co-founders and reach out to them. That's a very thanking note, and also the inputs that you gave. The comparison that Prasad had done in terms of West Indies. We are yet to get that sort of infrastructure and network to come up. Especially, more of the potential now. We are saturated. We have come to, global standard in terms of Noida, Pune, and Bombay, and sort of that. But we really want to see what can build Indian economy, and a lot of employment, which is the sole objective of getting entrepreneurship into such a big budget. That would be tier 2 and tier 3. And we would prefer even talk to Headstart to bring in certain problems, certain new areas to discuss and come together to explore those areas and bring innovations from very grassroots level. And maybe we would be resulting 5 years down the line, but we should be coming up with some new concept in that. And I think everything is set, only we need to talk to on new avenues and bring in potential ideas, courses, and work together for the area. Thank you so much, everyone. Headstart, 100x, Until, and also Jaron to moderate the session so beautifully. The audience, such a huge number, because this stuff is for everyone, and from all over India, I'm seeing the audience is there. Thanks a lot. Thanks for making all these things very liberal for everyone. Have a great day. Thank you.
Thank you very much.
Thank you for inviting us. Thank you.
Thanks a lot.
Thank you, everyone.